Hello guys, welcome to the Train Parrot. It's been roughly 3.5 weeks that I completely disappeared from the map, and that is precisely what I needed to do. Take some holidays, recharge batteries, but now I'm back, and I thought what could be the best video that I can give to my audience on this return. And the answer to that is to do a proper catch-up. Let's wrap up everything that's going on in the market. Let's try to clear all the bullshit aside, and let's try to get focus for what could be the next leg up, or some failure, some waiting, some extended left challenging cycle. Who the hell knows? Let's have a look. In this video, guys, I'm gonna look into what other people are saying. We're gonna discard whether it's bullshit or not. And of course, I'm gonna answer the questions from my Patreon community. After all, I disappeared for a full month, including the question of where the hell did you go and what did you do? I'm gonna leave that for the end of the video. In this video, I'm gonna cover Bitcoin, general markets, macroeconomy, some overlook at stocks, Ethereum, dominance, and all of these things. So get ready for a pretty long video, and as usual, in the description you're gonna find timestamps so you can skip to what matters to you. Guys, if you like this type of content, make sure that you're subscribed to the channel, hit the notification bell to get notified every time I put out one of these videos. And I was wondering if I remember how to say that. And I got a new campaign on bluffing. Of course, you can get VIP 1 and up to 1,000 in bonuses, win 9,400 real USDT rewards using the link in the description. And let's start with how much attention Bitcoin and altcoins are gaining at this point in the middle of August, September, which I remember clearly I said in one of my last videos, if not in many of them, that was going to be a challenging period. In terms of seasonality, that tends to be either August or September, the month that Bitcoin does a little bit of puking. And although we've been just sideways, the attention is the one that is currently puking. You can see that Bitcoin spiked in here as if it was an actual breakout, but we came back down to the low of the range in searches on Google Trend, and altcoins did something very similar, a breakout confirmed in here and then back to the low of the range. And speaking of seasonality, we should have some moves in October, November. The same as I said, August, September. One of these 2 months, if not both, should be in the red. October, November tend to have at least 1 month that is somehow impressive to the upside. So let's have a look at what the people that I follow are saying, starting with Martin. Long-term holders just offloaded 241,000 Bitcoin. That's one of the largest drawdowns since early 2025. I was looking at other reports of long-term holders and I didn't see that, so I suspect that Martin is looking into a chart that is very up to date, because look at the long-term holders on Bitcoin Magazine Pro, and I'm not seeing that amount of offload yet, at least. And neither on CryptoQuant on the indicators I have for long-term holders. This one in here, for example, hasn't spiked yet. Plan B, let's see what he's saying. He was very bullish at the end of the previous cycle, and he was wrong. Let's see if this time he's gonna be right. 2 out of 3 people think that 2026 will be a bear market where Bitcoin crashes. But what if Bitcoin continues its yearly doubling from 20K to 40K that happened in 2023, then it went from 40 to 80 in 2024, and possibly this time to 160, that will be double 80, end of 2025, and then 320 in 2026, and 640 in 2027. Wouldn't surprise me. Yeah, it doesn't surprise me that you are that bullish, because you, Plan B, were extremely bullish in 2021 and in 2022 when we entered a bear market and you kept shouting that we were going over 150K at the very least, which we didn't do. That doesn't mean that you have to be wrong this time. We'll see. TechDev is saying bear market while the reds decline, bull market ramp when bars are green, goes parabolic when the bars go into the red, and red profile mirrors parabola profile. So basically, he's showing business cycle signaling here. This looks like a MACD, but I don't think this is a MACD because the colors are reversed. So maybe he's tracking something else. but showing very clearly that this is the parabolic side when the bars are in red, and when they start turning into pink, that's when we start reversing into a bear market. And the state where we are, according to this point of view, is that we are still in the area where we should be accumulating and going higher. I have to say, these two guys are pretty bullish. That is pretty clear to me. Anoop as well, which I started following more than 5 years ago, could be replaying the 2015-2017 setup. That's what he's saying. If history rhymes, the next move will be explosive, with the Fed rate as the key catalyst. Watch out with the Fed rate cut, because there's two teams of people thinking about it. Some people think a rate cut, whatever we get, must be bullish. And I think they are wrong, because there is a rate cut and a rate cut, right? A small rate cut implies that we are going in the right direction in a controlled way. A cut that is like an emergency cut is like breaking the glass and grabbing the fire extinguisher because there is a fire in the house. 50 basis points or more, call it, can put a lot of pro investors a bit nervous. If not, tell me why people are buying so much gold these days. And yeah, Nasdaq is going up and all of that. And I think that is part of the arm wrestling that we are currently having. People thinking of the rate cut as the light at the end of the tunnel, and some other people fearing it. Imagine 1 million BTC by end of 2026, less than 10x from here. Sounds crazy, but remember when BTC USD was at 25k in 2023, many laugh at the idea that we will reach 100k. I have to say, it is very difficult to decide whether we're going to get one of these three scenarios. Scenario number one, we get the traditional end of the topping year with the beginning of a bear market in 2026, which is what many people are thinking is the case. Then we have scenario number two, which points out that every peak is slightly shifted to the right. So the top takes a little bit longer and a little bit later it happens with every cycle. The last time we had the top of the cycle at the end of the topping year with 69k, and if the trend continues like that, we should be seeing it then under this particular scenario in the first half of 2026, not by the end of 2025. And there's a third group of people thinking that thanks to ETFs, thanks to everything that changed, and particularly that we have had very little number of retail throughout the whole cycle. So there is this awkward question of who the hell is gonna sell if it's just institutions. Basically, people thinking that this whole uptrend has been way less liquid than previous cycles, where as soon as retail started rug pulling, everybody started at the same time selling off into the bear market. But there are some people thinking that that is just not going to happen this cycle. And there is something that makes it even more interesting. In the previous cycle, there were the same group of people based on other ideas saying there is no way that we're going to enter a bear market. And we did, which is why it makes it so damn interesting now to battle between these three scenarios. The end of topping year this year, the slightly shifted to the right mid-2026, and the most extreme one that says, nope, we're going to carry on for 3-4 years just into a super cycle going up and up and up into $1 million. Roman is also looking into the price action, a little bit more short-term view. In this case, he's looking at the 1 week chart with the double top that we also pointed out 4 weeks ago. And in this case, he's highlighting the potential for this bullish divergence that is forming in here. Is a hidden one, I believe, but the fact that this candle is at the moment testing the previous lost support as a resistance, which makes it a tricky situation because either it plays out the resistance and we get a rejection into the next support, which is around the 100k, or we reclaim the lost support on the weekly and we make use of the hidden bullish divergence. September rate cuts, odds have surged to 100%, and it's very interesting to see that Bitcoin still doesn't follow general markets and is feeling like Bitcoin was still looking for an excuse to have that rally. We'll look later in the video of where liquidity is located, where is it going to potentially attract in the short term. As usual, we're gonna do a full forensic analysis of everything that's going on in the order book, order flow, and all of that. Sailor says, the more capital I raise, the more capital I can raise. That breaks every textbook at Harvard and Stanford. I don't think so. There's been so many situations like that in history, and although I agree that it's very difficult to time the precise moment when the bubble pops, it will pop at some point. Of course, his interests are that you believe the contrarian thing, right? He's one of the best motivators that there are for buying Bitcoin, period. And I sent this post to my Patreon community asking people for what would you like me to cover in this video. So we're gonna go through the questions and see what I can cover in a video that less than 6 hours. Of course, I would prefer that you do the action of your usual charts on a Sunday alpha. Well, that's pretty much how it's looking the video so far. The only ones that might be a bit different is CPR and FPG. Everything else, feel free to give your comment TA. Give us a brief summary of your holidays. I'll do that at the end of the video. I think my biggest concern is having a strategy for the bear market. I have this nagging fear that we are already halfway there while everybody is waiting for banana zone. We should definitely cover the S&P and any weakness for September, yes, for sure. Sensing exhaustion, bull market top, the Google status slides, we're gonna look into that, Lara. Eric is saying, nice to hear your opinion on what to expect for September, given the danger of bad inflation data on the 11th. Some analysis on Sol, that I'm gonna leave it for the rest of the week. Yesterday, I barely slept 2 hours. I don't know how I am able to put all the charts together and make a video for you guys. You tell me if the video is coming out nicely. If it wasn't for this mate, I wouldn't be able to make this video. So let's look at some catalysts, some things that are going on, and then we're going to look into general information for macroeconomy to do just a wrap up of what I feel. South Africa, Altvest plans to raise 210 million to buy Bitcoin. That is bullish. Of course, it's not a big number. Bitcoin illiquid supply hits a record of 14.3 million. On-chain data shows 72% of circulating BTC is in an illiquid hands. Tighter float can amplify upside on incremental demand. And this is what I meant by institutions. I would like to see how they are judging if it's illiquid or not. Of course, when you're talking about altcoins or Ethereum, people talk about staking and stuff like that. In case of BTC, maybe they qualify for illiquid, some institutions, but considering that ETFs can also sell off, I'm not sure what's the actual criteria to really buy that 72% is illiquid. If the criteria is accurate, 72% means that we have a very strong floor, very different to the floor in the previous cycles. CryptoQuant BTC Treasury purchase sizes have shrunk. Average deal sizes down sharply versus early 2025. That is bearish. Suggests softer institutional bid, a headwind to immediate upside. And this, we need to judge it. Is it just because it's August, September, the typical seasonality? We are getting the typical behavior in these months. So it's difficult to tell. I will say if we see these signs in October, November, then that's a big thing to say. So, summary of macroeconomy, we had an inflation that surprised, then a CPI apparently is on September 11. We got core PCE. Markets expect a rate cuts starting September from C. Some people are talking about 50 basis points, and this is as a reaction to weaker jobs. Unemployment as well was surging, jobless claims, energy, and all the geopolitical tensions that we are seeing every day pretty much. So in the case of BTC, macro weight mode into the CPI on September 11 and the FOMC on 16 and 17. Weak jobs boost cut odds, but traders seem to want a little bit more of confirmation, as I was saying before. We'll look into the Big Well Explorer as well to see what the smarter holders are doing to understand. Yeah, looking at the economic calendar, I can see that on the September we have the core inflation rate. I was missing that one. But whenever I want to understand what's going on with the Fed and their decisions, I usually look into RESBAL, which is the Federal Reserve balance sheet. And as you can see, the recent readings have been just declining. This declining here reminds me the one that we have in April in 2024. And for all this period that it was declining, Bitcoin did nothing but going sideways. This is from around mid-March until October. It was just going down together with Bitcoin. The moment this broke out, then we saw immediately a push into the 100K levels. And we were hoping to see a channel to the upside, but this is starting to look a lot more now as heading to the downside. And this to me says, well, that the Federal Reserve is taking a little bit more of a conservative approach at this point. It's not a huge sell-off, but they're really not looking at the market with a lot of bullishness. Something odd with the aggregated interest as well, if you like me to give you a bit more of detail in this video, is that every time that we were pumping, we were seeing lower lows on the aggregated open interest. In this area in here, that cleaning of open interest with lower lows really helps for further upside. You can see it all the way here, then the lower lows again in here, then there, but this time is still not clearing out a lower level. And this could mean two things: that we are building a top, a strong top. I'm not sure fully if it's a local or a cycle top, but it doesn't really look that healthy yet. What do we need now? We need a clear of open interest slightly lower to the 36 level, in my opinion, to make it a lot more likely that after that we start pumping into 45. What does it mean for the price that? Well, it will mean basically a little bit more of downside, not as a forecast, but as a requirement to have higher chances that after that clear out of the open interest, taking out all these additional longs that are already positioned, taking them out of the way so we can move higher easily. When? Well, potentially October, November. Now, if we don't do that, if we clear too much the open interest in here, there's a point of no return. So we need to be careful how we clear that level with a lower low that is humble, just into 36. Of course, if we do a big clean into 28, we go into way older previous ranges, and that makes it a lot more difficult to recover from there. So far, September is around 3% in the positive. We already closed 1 month in the red. When I went for holidays, I say, well, at least we should have 1 month that is in the red between September and August. So consider that checkbox already done. That doesn't necessarily translate into we must have a September in the green because it's just 1 month. It could be both in the red. After all, look down in here how many times we get August and September both in the red. That can definitely happen. Let's look at CME. We are on a Monday, so we built a CME gap, but it's already taken. That close was around 111,587 on Binance, and we already took it. We closed it. But we have a heck of a big CME above our heads. This one on prices on Binance spans from 113.7 to 116.4. And I've been thinking that maybe, just maybe, to clear that open interest, price can go and close this gap within September, I will say. That will clear some open interest, obviously, from the shorts that are positioned and with the risk somewhere in here. And then come back down doing some sort of ABC correction, something like this. And then where does it stop there? Well, there is a conservative target, maybe around the 100K, not breaking that line. But then there is this 95 that is also starting to appear. Remember that my last videos, probably my last 10 videos before going for holidays, I was repeating like a parrot 107, 107, 107 in every single video. That's why when I was in the beach and I noticed that we were testing 107.7, some smile started appearing in the beach and people thought that I was looking at bikinis or something, but no, I was looking at the chart, looking at that 107 and remembering all of you guys and hoping that you took advantage of that. I personally, as soon as I was in profit, I took profits and closed all my deals so my brain could focus on what matters during the holidays, which is to eat, sleep, and shit. Right, let's look at the Bitcoin status. On the 4-hour, we have a breakout and it's rolling up the price action. I'll show you that. CPR pivots are currently resistance. Those are the ones for September this time. We have bullish CME gap at 116K. I covered that already. On the daily, we have a breakout as well from a falling wedge, but we have a larger breakdown from an ascending wedge, which I'm gonna cover. We are still in the context of the recent hash-driven buy from around a month ago, and we have a MACD bullish cross that I want to cover as well. On the weekly, we have the weekly close around the top of the range that happened a while ago, and we have a stochastic RSI bearish cross confirmed. On the monthly, we have support at 102.5, and we are within a healthy uptrend in that particular time frame. So let's start with the 4-hour. And this is what I mean that we are rolling up in here, because this is kind of curving up, and as a consequence, the RSI couldn't do anything apart from doing a bullish breakout. That breakout happened on the 2nd of September, and so far we've been doing nothing but retests of the breakout. Now, this could continue, right? So this could continue in this direction. We need a follow-up in here and not just doing this, because that will show again a failure. But when we get into the liquidation levels, I'm going to show you where is the incentive to push now the price slightly higher. We got this 113 that coincides with the anchor VWAP from the all-time high. Pretty significant level that has already rejected the price multiple times. It will be really nice to see if we can cross that level and hold it as support. Let's cover the levels of support and resistance in the 4-hour time frame. We got on RSI this 85, the 45, and the 27. And I also had in here the 70 that corresponds with the percentile, the top percentile applied to the RSI, currently at 67 actually. So that resistance from the percentile is the 113. Then the top of the range at the moment is 121 on the 4-hour. And the bottom of the range is 27. That is the global support. And interestingly, that global support at 27 is at 105. On the daily, flipping out there, remember I was talking about an ascending wedge, the one that broke down in here. This is already forming a bullish structure in here, which is very interesting. This is a falling wedge, and we are in the context of a breakout on the daily, which happened straight from support. Now we have resistance at around 59, then the top of the range is 84, support is at 40 more or less, and then the last line in the sand is 26. So that support is at 108, the first resistance is at 116. Very interesting level, because that coincides with this order block at 116.5, very relevant, and the top of the range should be pretty far at 152. That is if we kiss a 5th time the top of the range this cycle. So I reserved that for very bullish scenario. We have done this one 1, 2, 3, and 4. The dates are in the lower area of the chart. You can also see the MACD has confirmed the bullish cross on the daily. And that is thanks to the breakout of this falling wedge. CPR, we got new levels for September because I haven't done a video since around this area of mid-August. At that point, I was pointing out that we should be going to the first resistance of the CPR model. That is thanks to the previous month that we did that, and actually multiple months back. And the model says if you touch one of the green levels, which is the resistance, there are 3 levels of resistance and 3 of support in red, you should be doing the same the the next month, at least touch the first one. And that was located at 124,278 and the price pinch right there. And it is just that. It did all that was needed. It didn't go to the second or the third that were located way higher at 142. Now, this month, if we want to repeat the same thing, thanks to not having touched yet any red, so there is no disturbance in the force, and in theory we should be going to 119 according to this particular model. That means that we need to break the 3 pivots. The last one is at 116, so let's turn this into support, and then we can easily get into that 119, 120. Now, rejection from the pivots can send the price to 102, first support, 96, second support, or 85, third support. And I want to zoom out and see when was the last time that we touched the third support. Well, actually in the bear market, not even in the bear market, we touched the second, the first, none, the first, the second, there is no third, guys. So, well, it's a little bit out of range to get to 85 in the same month, at least, based on past performance, but 96 could be doable in the context of already entering bear market. In regards to the bull market support band, you can see that we are testing it as support. This is September, and if we go to the previous cycle, we can see that around September we were also testing it around here. Right after that, we enter the usual October, November euphoria in a topping year, and we put the all-time high in November. That's why the theory number 1, which is to just repeat the same plate, is to bounce from this support and to go somewhere on this extension, either 150 or 130, and to repeat the plate of what we did in 2021. After that, ending the year with the beginning of a bear market. Many people are with that in the back of their heads because it's just what is more immediate of the previous cycle. I'm kind of subscribed in a big way to the idea of a bear market in 2026, but there has to be a component that disappoints people that follow the rules by the letter. Every cycle, something shifts, something disappoints. You never get the same script word by word. Continuing with the weekly time frame, you can see that we are about to potentially see next week a bull cross confirm in here. We are bouncing from this support at 53. We were very close to test this resistance. That is very significant because this line that is coming back down in here is very similar to the pattern that we have in the beginning of the bear market in 2021-2022. You can see touch 1, 2, and the third couldn't manage to test that resistance. Very similar to 1, 2, and the third that couldn't manage. It's just that in terms of timing, these 3 touches are happening slightly shifted to the left earlier than in 2021. And that could give us a little bit of more room to potentially test it again later from a lower range in the RSI, but with higher prices. We are in the context of a bearish cross on the MACD, so this is going to have to compete now with the potential of starting a bullish cross on the stochastic RSI. My line in the sand on the RSI is RSI 44. That has been the support in all this cycle, and in the previous cycle, in average, it was the support. Of course, with the exception of the COVID crash. You can see that a lot more clear in this chart, the pattern of the 1, 2, and almost 3, 1, 2, and almost 3 in here as well. Let's look at the monthly, and what I can see is that this is rolling down, right? So this is losing momentum and starting to build some bearish divergences. Every single pump has less energy, it reaches less further away, and this pattern that is forming in here is already starting to look like one of these. So that could mean either that we should be finding support around the 100K, maybe pinching below intra-candle, then if we manage to close above 103, then resuming with another leg up. Of course, if we come into a previous range in here, we can also form some sort of double bottom. That is, in my opinion, possible, but way less likely that we can recover that easily from that. And remember that this cycle had a black swan event at the beginning, and one of the questions I asked to Benjamin Cowen when I was interviewing him was, what do you think will be the effect in this particular cycle of having a black swan event in the topping year? What if something really hits the fan at the end of 2025 and then you see some sort of V recovery at the end of the cycle into 2026, or it just kills the cycle and we go straight into bear market with no apparent recovery? That to me is the big question. I was carefully paying attention yesterday to what happens to the blood moon. I read so many articles about it based on history and past performance of the event. At least since May 2021, it has always been bearish after a blood moon. For example, in here, even FTX at the end of the bear market still had an effect. Now we are in the middle of one, so whether this is going to be the first of 6 or 5 events in a row to break the trend, who knows? Leverage squeeze has been very loud during my holidays, constantly saying that there's too many longs. At least these 3 signals that were appearing in the chart that I was using to trade, I managed to close the short somewhere in here, and then it pumped when I was already not making videos. And I was so happy that I already took profits, or I don't remember, maybe I took profits in here. Anyways, probably my Patreon members know better than me. I'm sure that part of my memory got erased during the holidays because of all the abuses. SOPR, which is the indicator that we use to know if people are closing at a loss or in profits, remains very low on Bitcoin, meaning that people are taking a lot, not of profits, they are closing a lot of positions in a loss at these prices. And being at the lower range, it signals that we are closer to a local bottom rather than a local top. So that could be slightly bullish. On the monthly, the RSI is looking pretty cool in here because we managed to dodge the bullet of breaking down below the support. That is very significant, guys, because every cycle on the monthly, we hold a line on the RSI. That happened in 2011, it happened in 2015, in 2020 as well. And as soon as we broke down, we have a revenge rally into that 69 that throw us into bear market. But so far, this cycle is slowly but steadily holding that line. The thing that I'm still curious is, when the hell are we going to spend some time above 70? We are very humble as soon as the RSI monthly reaches 70. In here, just the month of November, then the month of January, and then 1 month for a micro fraction in July 2025, but then back below 70, contrarian to what we did every cycle, that you can see some green there. In here, there hasn't been any green yet. And the volatility is the lowest that Bitcoin can give at the moment, the lowest in history. You can see it in here, the lowest. That is the lowest right before a pump. This is the lowest during bear market. Then this lower in here pushed the price back into 100K. So hopefully we're going to get the positive bullish effect from that. What doesn't look really good on the monthly is if we close September like this, we are putting a bearish cross on the stochastic RSI monthly, guys, and in the middle of the range in here. So if you look for similarities in a topping year specifically, we're talking about this year, for example, that bear cross is the last nail in the coffin for the bull market in 2021. So this being equivalent to this move in here. In 2017 and 18, it was the perfect cycle because we spent all the time above 80. So there is no such pattern to look. But in 2013, we had it as well. The move up, then the breakdown, this bear cross in the middle of the range starts the bear market into here. So this is not a pattern I like to see in the monthly, but since it's monthly, anything can happen on the daily and on the weekly. That could be a last leg up, and crossing fingers that we actually break the all-time pattern of Bitcoin of respecting this. When I left for holidays, no one was in spot in the market, and that was really worrying around mid-July. But you can see here that from the time I went for holidays, people started being interested in trading with spot. Around mid-August into the bottom price of 108 or 107 more precisely, it was very dominated by spot. You can see in here. And that is healthy. Now, being dominated by spot doesn't mean that the price pumps immediately. People here were buying on spot, then I suspect they have to hold and stop breathing for a moment until the price rebounds and they can sell again into profits with this pump. But that is an aspect of healthiness. What we don't know is how long this could drag down with the spot dominant, but that is a good alpha that promises at the very least another leg up. Big Whale Explorer, after we were complaining of so many big, large holders distributing or not distributing, but depositing into exchanges large sums of Bitcoin, you can see that that did have an effect. Probably they distribute all this way that caused a move into 112, then they waited for higher prices and they started distributing the rest. Probably I'm just speculating. Of course, there can be multiple ways of interpreting that. ETFs have been in the negative both for Bitcoin and Ethereum in the past days from 4th of September, but definitely Ethereum is taking the lead in here with very impressive distribution going on. This could be something temporary due to seasonality, or it could recover, impossible to tell. We'll look into the Ethereum dominance as well to see if we can find some clues there. We're at 44 in Fear and Greed Index, and you can see how servers didn't disappoint. After the sell signal in here, there's been some correction. Of course, we're in a bull market, so I made sure that every time I show you the signal, I say I don't use the sell to sell, right? I use this indicator in a different way. I'm just trying to put the patch before the wound in here for the people that are gonna sell, yeah, but you have so many sells that don't work and stuff like that, in which case you need to watch more often the channel. So let's look at liquidity levels and let's do the forensic analysis. This video is going to be very long, and there is timestamps in the description if you are eager to watch some other content. So we have a big liquidation level at 107 at the moment. This spans into 104 roughly. Then we resume from 98 into 94.3. So that's why I'm interested in two levels. I'm interested into what happens at 105, and I'm interested to what happens at 95 roughly, okay? Shorts are here at risk at around 113 to 115 more or less. Then we have a gap into 119. So let's remove these experts from here. Let's focus on the losers, the people that are using too much leverage and tend to, give away their funds because they really like to fund someone else's expenses. For example, my holidays. In here, you can see that the concentration, the largest one, is around 107. On the upside, there is this 113, and I'm trying to find an overlap with the CME gap that starts from here and it ends around 116. So the overlap reaches 115. It doesn't allow much more than that in terms of liquidity pools. On the longer term, we can see that we are, from the time I went from holidays, we started accumulating big liquidity pools at the top of the range in the longer term chart of trading different. There's a new level at 128 that I can consider it part of the pool number 2. Pool number 1, we already took it. We were tracking it. 2 is still there. 3 has grown a little bit. Here you can see the green coming in, and there's a new pool in town at 141, as well as the 150 that's still very mild, but is also new. This one started from end of July. Short term, looking at CoinGlass, we can confirm 107 is interesting and 95, right? I say 105 because I consider this whole pool a single thing, and the point in the middle is 105. It's also a round number, and it coincides with some level of support that we notice on RSIs on daily or 4 hour, I don't remember. Liquidity pools of the past 30 days are showing 113.5. That's the largest pool at the moment. And if we focus on FAR charts, let's have a look in here. On the monthly, we can see that the largest pools are on the upside. This is ask liquidity. This is different than liquidation pools. 125 and 129 has both roughly around $50 to $40 million. In terms of bidding, the most aggressive one are located at 108 to 106. We can call that the cushion that we currently have. If that doesn't hold, then potentially we can go into that 95K to hit hard the next liquidity pool. Purple whales are pointing down, so they are not really interested in trading this range. There is currently some liquidity at 112.2 on Market Monkey Terminal, kind of defending now this move up that we're currently having. There's also some ask liquidity at 120 and at 107. The order book seems to be defending the price from very close proximity. Most of the orders at high percentiles are at 2% below the price, 1% below the price. There's a little bit of a shift from the weekend where it was very thin. Now it's starting to become a bit more strong. And the delta is pretty flat. In terms of fair value gaps, we can see that we have a lot of fun that we can have to the upside. Since this move up was very aggressive, the rejection, you can see that as soon as it put a higher high, it got rejected back into 117. That was a very aggressive move of almost 6% in just a few hours. That left some very interesting fair value gaps there. And we also have this one in here, the 114. Below the price, well, we have the 105 that I'm talking about, which is in the middle of these two. And then we have the 95 located in here. After that, we really need to go sub 90s, where I wouldn't like to go this time. And considering my idea of maybe a move like this, and then this pinch or this pinch, which is what I have in the back of my head, is not future reading, but by considering those scenarios, if we were to go higher, well, that's also great. Since I just started looking at the charts, I'm still studying what's going on, not necessarily entering into a trade, but starting to form some narrative for me to play for the rest of the week, of course. Let's have a look at general markets. Well, interesting because I've seen a lot of people talking about how poorly the dollar index is behaving, but I keep seeing two things that are bullish for me, or at least three. One, the falling wedge. We are still within the falling wedge. I went for holidays and we did nothing but staying inside and building those limits. The breakout of the RSI is still not invalid. It went up in here and it hasn't taken any of the lows. So the RSI is building momentum rather than putting new lows and puking. Then we have the long time support that comes from years. We're talking about 2011 and then defending it again in 2021 and then in here. So that should be some sort of support. And so far we are holding that level roughly around $96, $97. I would like to see, even if we're going to break these levels, some move up into $100 at the very least, thanks to the falling wedge, just to disappoint the enormous amount of people that must be shorting this on Forex at the moment. That could lead to the RSI into 48, 50 level. And from there, we can see another leg down, possibly. Gold, of course, put a new all-time high. And as we are speaking, is continuing to put new all-time highs. And that is a confirmation that people are taking serious the geopolitical tensions, the weaker dollar, jobs, and all of that. And it shows that the narrative of the rate cuts by itself is not sufficient, really. Otherwise, people wouldn't be running into the safe haven of gold. VIX remains in the low range in here. I was saying, well, we recovered the support. We're going to have another leg up. And I think VIX is preparing for another leg up. I was expecting it to be somewhere here, but let's move my expectations to a little bit later. The RSI of Nasdaq continues to go higher, but is rolling over, as you can see in here so far. The top of the range is 75, and I would like to see where is that in the price in case we really continue going higher. That puts a limit at around 25.8. That is a move up of around 10% or less. And the S&P is doing pretty much the same. We have the breakout of the RSI and the rolling over at the moment. I think this is gold, and those fears are taking some of the traders that are betting on S&P, and that is reducing the strength of the move up on the stocks. Just in general look at the alts, we can see that we are at 41 pretty much all this month. It's been just going sideways, the altcoin season index. So it's neither Bitcoin season, neither altcoin season. This looks like a bull flag in here. Actually, it looks bullish. And if it plays out, it could bring another leg up. Maybe it needs a little bit more time to mature. You can see that others had a monthly breakout confirmed by the end of August in here. In September, it's also pointing up. There's been fake outs in the past. There was this fake out in here in December 2024. So hopefully this breakout holds and it manages to offer part of this expectation from me of the RSI getting into 62. That should bring others into 5.64. By the way, this is others divided by Bitcoin, which has been building this falling wedge in here and really saying this number doesn't tell you much, but what should tell you is that others are starting now to break out, and if that breakout holds and it doesn't turn into a fake out, we should see another leg up in here. Of course, it's a monthly chart, so watch out with the timing. This is not to run and buy everything tomorrow, but to look for good entries within a month or two. If we focus on USD dominance versus total 3 dominance, the chart that I was expecting eventually to get into the 20% or to the 15% to give that altcoin season is showing us that is still below the previous resistance. So a move down is bullish, of course, a move up and a move outside this flag is beginning of bear market. So everything that we want from this pattern is to see a rejection of 23% and move to my conservative target of 20 or the aggressive of 16. Of course, if we go way lower, if we go to 7, that is the best altcoin season that you ever seen. So that's why I'm trying to stay realistic and keep those targets in mind and hoping that we don't reclaim 23 and stay in this area that is bearish, or if we break out from here, that will be equivalent to this breakout in there that started the bear market in 2022. Now, Ethereum dominance, look, it's very healthy. It's actually collisioning with the 15% that was holding end of June in 2022. Now that is resistance. We are in the middle of a very aggressive breakout of the Ethereum dominance. It doesn't even come back down to retest. I left this line saying, well, I'm going for holidays and this has broken out. We should come back and retest. We haven't even done that. We went straight into 74. So putting higher highs and higher lows, we didn't get a rejection. So we are in the context of still very strong Ethereum dominance. Now we need to monitor the Ethereum distribution on the ETFs because that could bring the dominance a little bit lower if it continues, but hopefully not that low that it breaks back below this green line. Well, looking at the Bitcoin dominance now, I should have done it in the opposite order. Well, we are partially here entering area of altcoin season. I think if we break this 57 now, the index of the altcoin season is going to say altcoin season, right? At that point, we don't buy alts. We need to buy the alts before, when there is blood in the streets. When you are already in altcoin season, you need to be thinking only in distributing. When is it going to be the best time to distribute, not to buy? We were focusing in August on this area of the rejection. We were hoping that it was going to be a rejection with a new lower low. So that means that the alts have been performing much better than if we reclaim this 47 and we start coming back into 70. That will have made the alts bleed a lot more. And the fractal of the USDT dominance continues to play out just like in 2021. If you focus on this pattern, circle, square, circle, and red circle, we are in the red circle and we are doing pretty much that. I overlap the fractal in here and we continue to follow everything. Now, we shouldn't really continue to follow this that much longer, right? Because if the USDT dominance gets as high as 9%, we are in the bottom of a bear market. What we want is this to fail somewhere in here and detach from the fractal and move slightly, not that low, but something like this to give us another leg up if we can get. Total 3 is getting to the target, at least of the first resistance. We were looking to see if we can get with the RSI somewhere in here. We are pretty much 60% done with that task. The resistance comes at RSI 70. Let's see what I'm tracking in here. I'm tracking 72. If we get there, that's going to be, let's say 71. That means a total 3 price at 1.24 trillion. So another leg up in here with a higher high relative to November 2024. Ethereum monthly managed to break out in here. That's another good point for Ethereum. The rejection is annoying I distribute like crazy. I was in the beach, in restaurants, everywhere. We went at 4.8. I distribute more at 4.9. I got rid of all Ethereum as I planned. I say I was going to do it and I did it. Now, if Ethereum goes to 10K, I don't care. I'm going to use those funds to trade with other things. I am always where there is big risk reward. I don't hold to squeeze the last drop of juice because that is what kills you. When I was at Paul Barron, I say so many times, I am going to sell once I start getting into those juicy liquidation levels that start at 4K. It's concentrated at 4.5. It could get slightly higher. And the plan was sell the most when we get there. And when we get to 4.9, get rid of everything. Now, there could be a retest in here. If in September we see a comeback into 3.8 to 3.3, and I see some intra-candle and lower time frame strength for Ethereum, I might buy again. In terms of ratios, the most interesting chart that I must show you is the ratio against gold. And that is because gold is pumping, BTC is going sideways, and is building very similar pattern to 2021. You can see in here the pump in February 2021 of the RSI, that's against gold, again, not against USDT. And then we have a revenge rally in here, and we are having that same revenge rally at the moment at 61. It's hitting precisely the reverse RSI at that level and seeing so far a rejection. Of course, if the thesis is wrong, this could invalidate if we see the RSI coming into this white line at 65 and then carrying on into the top of the range at 81. At that point, well, things go just nuts for Bitcoin. That is the scenario 3 I mentioned in the beginning of the video. But if we repeat what we did in 2021, we are just ready for bear market according to this particular chart. So definitely worth keeping an eye to see how it develops. And as I promised, I was gonna tell you guys a little bit of what I did during the holidays. I know the videos are already long. I think after a month, it's good to condense everything I need to say. And yes, I went a little bit of time to Spain. I have some fun in Madrid. Then I went to Chile. I was planning to go to Argentina as well, but well, things didn't play out. So I ended up going in Chile, mostly to the beach. Reñaca is an amazing place. Guys, you really have to go. It was low season as well, so I managed to take advantage of entering every single restaurant, every single place, and be treated like a king. Did barbecues pretty much every day, drank a lot of really, really good wine. Let me know in the comments if you are a fan of Chilean wine as well. Oh my God, so good wine, so cheap that it hurts. I also play with my previous bands. I think I rehearsed at least 4 days, managed to rock a little bit and sing. It was really, really good holidays. Thanks so much for watching this video and looking forward to make more videos next week. During the week, I mean. I'm probably going to resume on Thursday as well, doing the private sessions of altcoins with my elite members on Patreon. Tomorrow I should resume as well doing some altcoin videos, catching up slowly with things and with my team as well. I'll see you in the next one. Take care. Bye bye.